If I tell you how much you have invested, you have unknowingly invested that amount in wrong investment option. If you don't believe me, see this Steady City had published an article in which they told why most traders lose their money. As you can see, this is the lowest level in which all the people jump in trading to become rich in few days. Then only 40% trader trade for 1 month. 80% trader quit within 2 years and only 7% make room in trading after 5 years. But shocking is that only 1% trader are in profit. As far as fixed deposit or other investment options are concerned, you already know where you stand. In this video, I am going to tell you by comparing 8 investment options according to following factors such as interest rate, investment amount, risk, tax, liquidity, time horizon, and the most important at the end that we talk about when to use. That's very important. Saving accounts, fixed deposit, bonds, PPF, real estate, gold, stock market, cryptocurrency. Let's start. First of all, shock na listening savings account in investment option, but it is one of the investment option. So now you got one more reason to save money and keep that in your savings account. Before you throw your question, savings account, you are telling us to keep money in savings account. Hold on man, we will discuss this in when to use which investment option at the end. Don't you have patience? Keep quiet and watch the whole video, and after that you can put your opinion in comment box, okay? When you look savings account, interest rate, before that one thing I forgot to tell you, interest rate numbers can be approx. So I will consider the average or at least range of number to get an idea, because interest rate numbers can vary depending on time horizon and amount. And also do your own analysis before putting money anywhere. Let's get started. Interest rate. Saving account interest rate are around 2.5 to 7%. But when you look at the popular banks such as SBI and HDFC, they provide 2.5 to 3.5% interest. And don't get offended if I had not mentioned your bank in that popular bank list. Number 2, fixed deposit. When we talk about fixed deposit, your family level, right? Fixed deposit returns are generally 3 to 7.5%. Well, you can generate 0.5 to 1% extra return on FD if you have senior citizen account. You can see the fixed deposit interest rate of following banks. Bonds. In bonds, there are two types, government bond and corporate bonds. The government bonds provide you anywhere to around 7 to 8% depending on which bond you take. Some might give you higher, some might give you lower than this, okay? But it is much more safer compared to corporate bonds. Whereas corporate bonds can provide up to 11 to 12% return, but that are very much riskier. Either you make or lose everything. Yeah, that's the sad part of corporate bonds. Paper return is around 7.1%. Well, when we talk about real estate, which is around 6%, but when you consider rental yield on top of that, which actually you decide how much rental interest you have to take, but it is generally around 2 to 3%, so you can get around total of between 7 to 9%. Now gold, when you look at the gold average return in last 20 years, it is almost 11%. Stock market, listen, I know stock market have a very wide range of returns. Unlike other investment option, so like other investment option, if they have this much interest rate range, where stock market interest rate can be like this much. Well, don't say in comment we can generate 200 400x in penny stocks. What I said earlier, keep quiet. I am considering every common people who can make money, not for one or two people. So for better understanding, I am considering Nifty 50 average return, which will give us little bit range to understand better. Nifty 50 interest rate are generally around 10 to 15%. I know sometimes it's more than this and sometimes it's less. But again, what I said, we are taking average. Now, crypto. What I tell about crypto. I am not a big fan of crypto. Listen, cryptocurrency returns are like, let's say you made so much money and as soon as you try to share this good news with your friends, family, you will get to know that you are bankrupt. Jokes aside, but it is the reality actually. Yeah, you never know what will happen to crypto. It's so much volatile. Now we covered first factor, which was about interest rate. Now let's say lock-in period. Basically, in simpler words, for how many days one need to invest money to generate handful amount of interest on their investment. Note, you can withdraw before the maturity by providing penalty. It's up to you. One, talking about savings account, time horizon, well, there is no particularly no lock-in period. Yeah, when you look at FD, lock-in period, which is around 7 days to 10 years, well, many people actually do fixed deposit for almost 5 years. Again, it's up to you. Number 3, bonds. Well, bonds also have their lock-in period according to one's needs. Let's say some bonds which provide 8% has a lock-in period of 6 years, while SGB, which is sovereign gold bond, is for 8 years and on and on. Now, when we look at PPF lock-in period, it is generally around 15%. And when we talk about the real estate, gold, stock, and cryptocurrency, it's up to you for how many days you can hold. Number 3, now it's time to look the third factor, which is how much tax is applied. When we talk about saving account, interest income earned, one don't have to pay tax up to 10,000 rupees. Before you think so it's great, we'll have multiple bank account where the interest earned will be below threshold. Wait, bank are more smart than you. They had not opened orphanage. They are also here to make money. In the end, they also have family. You have to pay tax on your total account. That means, let's say if you have 3 accounts, that means you have made 30,000 total from all the account. Then you have to pay tax. Well, but if you are senior citizen, you can get up to 50,000 interest income for tax free. Now, when we talk about FD, TDS on FD depends on you. I mean, if you have bank FD, then interest income will taxed if your earning exceed 40,000, and if you are senior citizen, it is around 50,000. So 10% TDS will be deducted according to your tax slab. 10%, or you can say you will be taxed according to your tax slab. But if you have NBFC FD, NBFC interest threshold is around 5,000. That means once you go above that, you need to pay 10% TDS. Acha, note one thing. By chance, if you fail to share your PAN card details to bank or NBFC, you need to pay 20% TDS instead of 10%, or depending on your respective bank policy. PPF, when we talk about tax on PPF, congratulations, it's time to celebrate because you don't have to pay any tax on interest earned on PPF, because PPF fall under EEE, that is exempt category, where the interest earned and the maturity amount of PPF is completely tax-free. Bonds. Well, bonds are also tax-free, but government bonds are tax-free. You need to pay tax on corporate bonds. Now, real estate income also are taxed. We will cover in detail. If you want to know about real estate investment, comment below. Let's talk about gold. If you sell gold after 3 years, then it will fall under LTCG, which is long-term capital gain, and which is around 20% plus 4% cess. Cess is basically government often charge a cess for the purpose of development in social sectors. And when we talk about stock market, short-term capital gain are taxed 15% and long-term capital gain are taxed at 10%. Now when we talk about crypto, it is around 30%. Now when we talk about liquidity, saving account is highly liquid. You can get your cash in front of you anytime and anywhere you want. Well, FD also has little bit liquidity, which is good. You can get your cash anytime. The only drawback is that you need to pay penalty if you break your FD before the maturity time. So as compared to saving account, it is not that much liquid, but yeah, you can get anytime you want. But unlike FD and saving account, PPF has not that much liquidity because you need to at least wait for 5 years in order to take your payment. Note, forms and charges process might also needed. In bonds, you also need to hold till maturity. Of course, you can break anytime you want by paying penalty. Now, real estate, Well, seriously speaking, in real estate, liquidity is very less. I mean, you never know because this is not like saving or FD. In real estate, if you are a beginner, your large amount of proportion of wealth might stuck for a longer period of time if you don't know how to deal in real estate. So in liquidity terms, it's a little bit hard. And when you talk about the gold, yeah, it's great. It's highly liquid because gold is highly demand. And when you talk about stocks, you can sell your stocks and you can get your amount in few working days. Cryptocurrency, not as liquid as other investment option. Basically, the initial amount needed to invest in saving account, in FD, PPF, bonds, stocks, real estate, gold or cryptocurrency. Listen, you can start with any small amount, whether it is stocks, saving account or whatever. But see to it that the amount of investment, the higher is for you, you can generate high interest on that so that you can actually feel that. Listen, saving account, fixed deposit, PPF, bonds, gold. All these are at least little bit risky. When we talk about the real estate or stocks, yeah, you can say they are medium risk. And when we talk about the cryptocurrency, it is highly risk. Cryptocurrency, like it is not only risk for your wealth but also for your health. So emotionally weak people stay away from crypto. Well, this is not hard and fast rule of segregating which one is less risk, medium risk or high risk. I had just given you a hint so that you can understand it much better actually. Okay, but do you know what? If you don't know the next step, what I'm going to explain, whether you invest money in less risk or high risk, you are going to lose money. Well, it's high time to know about when to use which investment option. This may be the reason why many people fail to grow their wealth. Forget about going, they lose money sometime, most of the time. Listen, you are free to use investment option according to you. I am not saying that this is the only way to use all these instruments. You can watch and later on decide how to execute. Don't randomly follow any advice, whether it is me or any else or whether it is financial advisor also. You need to do your own analysis at the end to get a better result. Are you getting? First of all, savings account. You can use this for only for short-term saving goals. You will say what was new in that. I know, but many people put all their hard-earned money in saving accounts for decades, which is wrong. That's why I mentioned short-term goals. Want to know more about short-term and long-term financial goal? Do comment below. Fixed deposit, seriously speaking, I'm not biased with my FD decision. Listen, let's break down in front of you. Okay, many people knowingly or unknowingly they put money in fixed deposit to grow their wealth, but you can't do this. You can't use FD for investment option that can help you to actually grow your money. If you don't believe me, let's do calculation. Assuming fixed deposit gives you almost 5%, I took mid number, okay, because when you see interest, it is almost near about 2.5 to 7.5%. So if you get 5% on FD and average inflation rate is around in last 50 years is around 7.5%. That means you get 5% on FD and inflation is 7.5%. That means you get minus 2.5%. That simply means your money is losing its value. Note, we use investment for mainly two reasons. Number one, to beat inflation. This will be our first priority. Number two, to grow wealth. This will be the second priority. At least you need to make sure your investment beat inflation and also grow. You can't only look that it's growing without having an eye on inflation. No, you can't. So you will say that means we should not invest in FD, right? No, wrong. You can use FD as an emergency fund. Listen, when you put aside money for emergency fund, your primarily goal is to protect your wealth rather than growing. Right? So if you put money in FD as an emergency fund, you will make sure that it is protected and on top of that, you get some interest which is fine. Okay, PPF is actually a nice investment option because it is tax free. And second thing is that if you are looking for long-term financial goal, then you might consider PPF because generally PPF investment is around 15 years. either you can use as a retirement goals, child education goals, or any other long-term goals you are looking to unlock. Bonds can be mostly used for, again, it's up to you whether if you want to use for short-term, mid-term or long-term goals. Though I must say there are much more better option than bonds for long-term. So if you want to use bond, you can use it as a short-term goals. Okay, listen, real estate, gold, stock market, you can do all this investment for long-term purpose. Real estate can provide you passive income in the form of rental in, and stocks can also provide you passive income in the form of dividend. And the last one, cryptocurrency. If you are ready to lose all your money, then crypto is for you. There are many things to talk, but it is not possible to cover all in one video. So if you want in detail explanation, I'll make sure that I will make a specific video on particular topic. Do comment below which. Let me give you quick overview when to use which investment option. Saving account only for short-term goals, FD for emergency fund, PPF long-term goals, retirement goals, education loan, it's up to you. Bonds, short-term is much better. Real estate, gold, stock market, all this you can use for long-term goals. And if you want to generate passive income, you can with the help of real estate and stock market. Cryptocurrency, ready to lose. Again saying, do your own analysis before putting money anywhere. Do you know that knowingly or unknowingly you do the same mistake again and again? Watch this video.